All right, in today's video, I wanted to break down the concept of strong highs and strong lows and weak highs and weak lows. And I think that's a big concept that a lot of people misunderstand. And so I wanted to share it by breaking down a trade that I took today. Well, I actually took two trades, and one was a break even and the other one was a winner. And I want to share the concept of weak highs and weak lows, strong highs, strong lows, and how they are important and how they can guide you into understanding where the market is likely to go next, so you can always be on the right side of the market. Not always, but in a probabilistic standpoint, 50, 60% of the time you can be on the right side, and therefore you can be profitable. Now, one of the things that people really struggle with is like, how do I know where the market wants to go next? And that's all about understanding how the market flows. And so I'm going to do a quick breakdown that I share in many other videos, that basically when the market is in a bullish trend, it should move like this, correct? So you have this series of higher high, higher low, higher high, higher low, higher high, higher low. And then what happens is price will pull back to like some supply and demand zone in here. And then people will look for longs, right? Targeting this liquidity, because above each high and low, there's liquidity. There's people that sold here and sold here and sold here that have their stop losses above here. And so that's liquidity that the banks and financial institutions want to target. And so that means that if the banks and financial institutions want to continue with this uptrend, the bullish trend, this low should remain protected. If this level is to break, then this should just break, this should break, and this should break. None of these should hold anymore because now we're in a downtrend. So if this becomes invalidated, we're now looking for sells. So again, the next target is going to be this high. So when you get into a sell, or sorry, when you get into a buy here, you know where's your target here, and that this low should hold. If this does not hold and price breaks and you see this, then you're thinking, okay, cool. Now I'm looking for sells. Sells where? To target the weak low, because now at this point we had strong low, strong low, strong low. So in a bullish trend, you have strong lows and weak highs. In a bearish trend, you should have weak lows and strong highs. Sorry, I want to make sure I had that right. So you should have strong lows in a bullish trend and weak lows in a bearish trend, and strong highs in a bearish trend. So when price is going bearish, this level should hold. So when you're looking to take this, you know that you have probabilities and the edge on your side. So therefore, when you take a trade in here, maybe you look for a fractal supply and demand zone to be hold, and then you enter, and you know that your target is here. So whether this is like 15-minute structure or 30-minute structure, you know that your target is this 15 or 30-minute low, because this should be where the liquidity is. And if it fails, right, and then price does this, you know, okay, cool. Now I'm waiting for the next zone and I'm targeting here. And so this is how you can understand where to enter in the market and where to target, and what is a strong high and a strong low, and where the market is likely to go next. So I want to share a trade from today. Let's see. So we'll go to the 1 hour. So I was looking at the 1 hour, and the first thing that I saw was price was bearish, right? So as we said earlier, if price is bearish, what should happen next? This should be a weak low. This should be a strong high. Price should come and hit this and then continue lower. But what you see here is this low is formed, and then we form a strong high, and then this is now your next weak low. So price should pull back into here and then continue lower. But then what do you see? This level becomes invalidated. So now we know that we potentially have a bullish trend. So this is no longer going to be strong highs. So now these are weak highs. And so therefore these are likely liquidity that price is going to target now. So now we're bullish. So we're like, okay, cool. Well, where's my area? We have a strong push to the upside. So I'm thinking, cool, where's my supply and demand zone? Well, it's going to be here. Why? Because it's the last down move before the break of structure to the upside. What causes this break of structure? This down candle, right? This down candle before we go up. Also, I know that on a lower time frame, this is mitigation to mitigation. So I already have that on my side. I already know that we have protected lows or strong lows on like a 15 minute. So I can see that through this wick, I know that this looks like this on a lower time frame, maybe like a 5 minute or 15 minutes. So I know that these lows are being protected. So I have the 15 minute on my side, and I know the 1 hour is likely going to go long, and wherever my target be, this high. But I also had the understanding that technically the 4 hour is extremely bearish, and so we just tapped into this zone and we could go lower. So, I didn't want to get caught trying to catch the bottom, so I wanted to wait. What did I want to wait for? Well, I wanted to wait for some kind of confirmation, right? I was considering entering down here, but I thought, well, it's kind of risky because at this point, the 15 minute is bearish, right? Because this is bullish. If I had come and done this, I would have looked to enter in here, but we didn't get that. What happened was price broke. So I'm like, well, the 15 minutes bearish, and then the 1 hour is bullish, so it kind of threw me off. So I was like, well, let me wait for confirmation. And that's one of the things that people forget about, is you can just wait for extra confirmation. What are you waiting for? Okay, well, if you're waiting for price to go bullish on the 1 hour, and you're trying to play this, right? You're trying to play this high being taken out and price coming into here. What do you wait for? You just wait for a lower time frame confirmation. What's a lower time frame confirmation? Well, a lower time frame confirmation is this. Price is bearish on the 5 minute. And then what did we say? This should be a strong high, and this should be a weak low. And so what happens is this becomes invalidated. So now we know what? That if price pulls back, this should be a strong low now, and this should be a weak high, and the price is going to break that. So when I see this breakdown here, I know, okay, cool. On the 15 minute / 5 minute, we just went short-term bearish. So bullish. And so that's all you're waiting for on the lower time frame. It's just price to show you confirmation that now you have a protected low. If price was to take me out and break through this, cool, I'm out the trade. I don't care. I just know that over time, enough doing this, I will be in winning trades and I'll be profitable. So what I said, we see 5 minute, strong push to the upside. So we have this 5 minute momentum shift. That's what an MS is, momentum shift. So you can see price is bearish. And then we see what? Boom, shift higher. So now I'm like, cool, where are my supply and demand zones? Well, in the 15 minute, you have this whole zone here. So that 15 minute zone is there. And I was like, well, within that, we have this inside bar. And then within that, we have this. But I knew the whole zone was a zone. So once I saw price basically wick this low, I knew what? I knew that this could be just liquidity, right? This could just be a liquidity grab. Or within this 15 minute zone, right? We're within this 15 minute sell to buy. And so therefore, I know that institutions were selling, taking out liquidity, right? Liquidity being taken out by the institutions before a strong buy up. And I know that the market needs to balance because there's lots of imbalance in these areas on the 5 minute. So I know the market is likely to pull back to these areas to balance the range. And so I know that, okay, cool. When price gets in here, I want to see my confirmation. And so what is basically how to build a trading plan? As I explained this in my last video, it's you need to have, how do you draw structure? What are your areas of value? Where are you looking to enter? And then on the lower time frame, what do you want to see as your confirmation? And you just need those 3 things along with management and risk parameters, and you can be a consistent trader. And so what I see is price coming into the zone, and I see this strong formation, this strong push. And that's one of the things I like to see, is a very strong, momentous push. I don't want to see price come in here and just kind of dilly its way up. I want to see like a strong push. And so what we see is, and I like to use the 30-second, so I'll show you real quick. So basically we send the 30-second, we see what? We see price come down, and then we get a break of structure. So this is break of structure 1. And what I like to do is I like to wait. I like to see, this. So let me show you. I like to see price coming down. I like to see break of structure 1, a pullback to test this level, and then a break of structure 2, and then a pullback, and I like to enter here. Why do I like to wait for this? Well, I like to wait for this because of what? This is everything I just said earlier. Strong lows. These are lows being protected. How do I know this? Because again, we're seeing buying. This low is being held, and then we push higher. So I know that these lows are likely protected. They're strong lows. The problem with doing this and just entering on the first break is that this right here could just be a grabbing of the liquidity, right? Grabbing of stop losses before we continue this bearish trend. And so that's why I like to wait for another break. It's more confirmation, and then we pull back and then I enter here. And so what do we see? We see price break to the upside. We'll get a small pullback coming in to test this zone again, right? This is the last sell to buy. So I see, okay, price is coming to test this zone. So this is my supply and demand zone. This is my demand zone. Price breaks, boom, pulls back and tested. Then I'm like, okay, cool. Then I see this is my new demand zone. So this should be protected and this should be protected. So when I enter here, I have confidence. I know that this level should hold. If it doesn't hold, then my whole theory is wrong. And I want to wait to see price do something again. I want to see price come down, take liquidity, and then look for another double confirmation entry. And that's it, right? You just have a bias, you stick to that bias, and then you enter. And so, boom, I enter here, price starts going higher, and then I see what? What do I see? Okay, well, if you understand that if price is in a bullish trend and the lows should be protected, then once we see, and then once I enter here, right, and I see this breakish structure, I'm waiting for price to move a little bit higher, and then once I see another breakish structure to the upside, that's when I go to break even. Because I want to make sure that price doesn't do this, right? Price doesn't just go like this, come back, take liquidity, and then continue higher. Because many times it will do that and fake people out. So I like to wait for the double confirm, just like I wait for the double confirm to enter. I also like to wait for the double confirm to move to break even. So I move to break even once we confirm once, confirm twice. So we break structure twice, and then price comes back, take me out for break even. I'm like, okay, cool. Well, what could this be? Again, am I thinking, well, am I thinking that price is going to go bearish now? Like, because we broke this structure? Yeah, it's bearish on the 1 minute. Oh, sorry, that's bad drawing. So yeah, it's bearish on the 1 minute, but that doesn't mean that that on the 1 minute time frame it's going bearish, right? We just broke this low, and that's true. But what you have to understand is that the market is fractal, and therefore, on that time frame it went bearish. But maybe on the 5 minute time frame, for example, we're still bullish. And then what we see, maybe a better time frame would be a 3 minute or something. And we see what? We see this move to the downside, and then we break. So we have another break of structure. So what I think this is, I'm like, oh, this could just be a 3 minute order block or something like that. So I'm like, price could be coming back in here, testing this area, and then continuing higher. So I'm like, okay, cool. This could just be like, you know, a fractal variation of what I just saw. So basically the same thing I just saw could be occurring within this demand zone. Because you got to understand that when price wants to move, right, in a trend, it wants to go like this in the 1 minute. And I shared this in one of my other videos, and then we go bearish, right? And then we continue higher, and people are like, well, we went bullish and then bearish. Why did this happen? All this is on the 5 minute is price doing this. And then maybe on the 15 minute it's doing this. So you know eventually that the 5 minute is going to pull back. So when this goes bearish, I'm not thinking that price is bearish. I know this is likely just a 5 minute pullback. This is just a 5 minute pullback, right? So as soon as price comes in there, what am I looking for? I'm waiting for the 1 minute or the 30-second to come back in line, because I want to be sure, right? Because I could be wrong. This could just keep going down. So what you do when you're waiting for a confirmation is you're waiting for this time frame to go back in line with this, so that you know that this is a 5 minute pullback and that price wants to go higher to continue this 15-minute trend. And so what do I look for? I look for price to come in to tap this zone. So I know that this is what? This is this. And I'm waiting to see, I want to try and catch this. I want to catch this. So then what do I look for? I look on the 1 minute for price to be bearish and then price to be bullish. And then I enter because I know that this is likely going to be this. So then where's my first target going to be? Well, I'll share with you with that in a minute. So what do we see? We see price come down, boom, break structure, and then we break up. So this is break of structure 1. Price pulls back, taps the zone. What is this? This is weak high. This high is likely weak, and this low is strong. So strong low, strong low. The lows are being protected. Strong low. All the lows are being held and protected. So as soon as I see price move higher, then I enter. I put my entry right here. Boom. It's like a 2.5 pip stop, and I'm looking for price to go higher. And I'm like, cool, where is my first target? Now, this is what I was talking about earlier. If we know that the 1 minute was bearish, right? And this is the 5 minute, remember? When price wants to do this, right? Where should my first target be? Well, we know if the trend wants to continue, right? It should look like this. So where's the next target? It's always going to be the high, right? Because that's where liquidity is resting. You want to take profits before this pullback happens and then price goes higher. So I'm like, cool, where is that? Well, I'm like, okay. If we drop to the 5 minute, boom, it becomes really obvious. This is the 5 minute trend. So I want to target here. So I took my first partial on this trade at like a 1 to 4.8, right? And then on the second profit was this high, right? This is where I originally was targeting. I knew that, like I said, the 1 hour was bullish. So if we know this bullish, what's the next thing that's going to happen? It's going to take out this high. And so I was playing that idea, and I knew that we could take out the high. So I thought, okay, cool, let's target there. But I also understood that, as I told you earlier, the 15 minute is bearish, right? Because we were here, and then we go bearish and break this low. You can see this 15 minute I wrote there. So I didn't know that price could come back up into here and then go lower based on the 15 minute, because things were conflicting. I like to wait for things to be in line, but sometimes I won't, and sometimes I'll just enter right away. So I was like, cool, I want to target somewhere, you know, in this area in case price does come in here and then go lower. And so I was like, cool, well, where's a good area? And I looked on the 5 minute and I saw this high, but I didn't want it to break the high. So I was like, let me just put my stop, or I put my target a little bit below that. And then basically price comes up and taps the zone and takes me out. And look what happened. If I didn't take those partials and I just tried to play this 1 minute range, I would have got out for nothing. And that's what I was saying earlier about, like, a strategy is not just entering. It's not just structure. It's not just, you know, those things I said earlier. It's also risk management. How are you partialing out when you're in profit? You know, what are you doing when you enter, when you exit, things like that. Like at this point, 80% of my position was already off. So by the time it came back and took me out for break even, I was already up like, I think like 6 RR or 6% for the day. So, you know, on a FTMO, that's like $6,000. Like, you know, so when I understood that, I know that I'm playing the long game. I don't need to catch a lot of these things. And that's what happens here. So like a lot of people would be like, would look in hindsight and be like, oh yeah, I would have taken, you know, like I would have taken this at, you know, 5% profit. Like we were running like 5% profit on this trade, this initial trade, you know, and you could be like, oh man, I should have partialed here. Or I should have taken my position off here. But like, that's all hindsight. You don't know that in the moment. And let's say I had done that. Let's say I did that on this trade, but then the next trade I take all of my position off, like, you know, here. Well, I just missed out on probably 4 or 5% by not running it all the way up here, by not following my rules. And that's why following rules is very important, as I share in my last video. But anyways, today I just want to talk about, you know, strong lows, strong highs, weak lows, weak highs. That's how you understand where the price is likely to go. It's all about stacking things in your favor. So waiting for a zone, waiting for price to break structure, come back, looking for a lower time frame confirmation. Because again, as I said, this is like the 5 minute. But on the 5 minute, you know, on the 1 minute, it's going to look like this. Price is going to go bearish and then go bullish. So you're just waiting for this to happen within a 5-minute or 15-minute or 30-minute or 1 hour, whatever demand zone, time frame you want to use. Then you look for a lower time frame confirmation. All you're waiting for is price to go bullish, because then you're stacking the odds in your favor. So yeah, that's weak highs, weak lows, strong lows. If you have any questions, drop them below, and have a good day.